Welcome to Greystone Capital Group, where we invite you to embark on an extraordinary journey towards a life of abundance and fulfillment. At Greystone Capital Group, we specialize in the transformative power of passive investing in commercial real estate. Your journey to financial freedom and a fulfilled life begins right here. Subscribe now and let Greystone Capital Group be your guide to shaping a brighter tomorrow.
Hello, everyone. Today I have a special guest. Alex Cartwright is my friend, and we met through the Michael Blanc events. Welcome to the show, Alex.
Good to see you, John. Good to be with you. Yeah, we met at Michael Blanc's, what was it? Well, did we meet at the boot camp, or did we just see each other at the boot camp? Maybe we met at the boot camp, I think, about a year and a half ago.
I think it was in Tampa in a year and a half ago.
Yeah, it's great. Yeah. And I know you're a mentor with Michael Blanc, and I'll just say that I've had a really good experience going to those events. Always met a lot of high quality people like yourself and gotten a lot of value out of them. And I recommend those to everybody that's listening.
Great. So let's talk about yourself, Alex. And how did you begin your real estate journey? And tell me about your background.
Sure. So I am I'm a professor of economics at Ferris State University. And so I'm maybe a little bit different real estate investor in the sense that I like my job. It's kind of fun and rewarding. And luckily, I don't have like a 9-to-5 grind that I'm trying to escape. And I got into real estate doing not very sexy stuff. I thought it was a smart idea to buy a duplex, live in one unit, have the other unit pay the mortgage to really help me save more money. And after a short period of time, bought another duplex and another duplex and scaled that way. And it was actually Michael Blanc's podcast maybe 4 or 5 years ago that first introduced me to the syndication model. Yeah. And I thought, wow, that really makes a lot of sense, both from the investor perspective and the sponsor's perspective. Mm-hmm. And so as I continued to grow my little portfolio, my family and friends saw different success I was having and kind of offered informally to place capital with me to invest. They wanted to partner. And then when the right property came along, it was time to do my first syndication. So I did a syndication and kind of then made the decision that I wanted to scale in the syndication space. But kind of unfortunately for me, that was in 2021 and into 22 when interest rates and cap rates were going straight down, and I couldn't find a property that I thought made sense on the risk reward spectrum. Like these properties got really expensive with interest rates going so low. And when cap rates go down, now, of course, that's a lot of upside, but that's also a lot of downside, right? Because cap rate goes from a 4 to a 6. Well, that is way worse than going from a 6 to an 8, just because cap rates are exponential in the way that they multiply the NOI on a property. So I was very scared about buying something at a 4 or 5 cap. And, maybe that cost me money, but that did save me from overpaying for a multifamily in 2021, 22. And I couldn't find something else to buy. I was at a conference, a syndication conference, the best ever conference. This was back in 2 years ago. And I actually met a broker at that conference, and he said to me, hey, there's a hotel for sale in your market. I live in Grand Rapids, Michigan. And he said, I think it makes sense as a conversion to multifamily. And I guess maybe I had heard about people converting buildings. It's not a new concept. We've all probably seen old factories that have been converted, or old theaters that have been converted, old office buildings that are converted in downtown. But I never thought about converting a modern hotel to multifamily. And he said, why don't we go look at it together? So I said, all right, we'll go look at it. And we went and looked at it. And I didn't really know what to expect. I'd never really toured a economy brand hotel that was for sale before. That was a new world to me. And all that I could think about is, wow, this conversion stuff sounds like a huge pain in the ass. You got to get the city to change the zoning. You've got to get the owner to take the franchise off the building. Then we've got to do a lot of construction to every room, adding kitchens, maybe adding a sprinkler system. And then we've got to lease up the whole building from zero, right? And then we've got to somehow finance all this construction. And it might take a year before you either refinance or get your leasing schedule complete and start making distributions. But what I did is I sat down after seeing that property, I sat down that evening and I started putting numbers on all of those problems that I just explained to you. And this is what I think all good entrepreneurs should do, right? Put prices on problems. And probably a lot of people in real estate, they started off flipping houses, and you would not look at a house that is ugly and say, well, I shouldn't buy it. You would just try and put a price on that problem. It's got an old bathroom, put a price on it. It's got a nasty kitchen, put a price on it. So all the same problems with the hotel conversion, I started putting a price on. And even I was putting really, really high prices on those problems, the zoning, the kitchens, the lease up, etc. And what I discovered was that while those problems are expensive, frankly, they're just worth solving, because you can buy a hotel for $25,000 to $35,000 a door in a zip code where multifamily might be selling for $130,000 or $140,000 a door, and you're going to do $10,000, $15,000 worth of work to it. There's a huge amount of arbitrage there. And at the same time, right now, nobody can afford to build more C-class. And there's people like you, John, that are out there looking for the C-class property in the B-class neighborhood that you can put the new flooring in, put the new cabinets in, and pump the rent up on. And that's a great business model. That space is just crowded, and it's decreasing the supply of C-class property. So I thought, wow, we're in this economic environment where hotels are a little distressed. Business travel is not at its pre-COVID level. And hotels also have kind of a finite economic life to them. Like maybe a hotel starts off life as a Marriott, then it's a Holiday Inn, then it's a Best Western, then it's a Super 8. Ultimately, it's a mom and pop that is mismanaging it. They're kind of out of money, and the new hotel will just pop up down the street, right? So hotels have a limited economic life in a way that's different than an apartment. So you're always got these old hotels to buy, plus they're really struggling post-COVID. And then you've got a decreasing supply of Class C properties, and you got all this demand for affordable housing for a lot of the reasons that we know: high interest rates, high building costs, high labor costs, all the rest. And I thought, wow, I need to just become the expert on how to unlock this value. There's a ton of supply of old, cheap hotels. There's a lot of demand for affordable housing. Somebody needs to crack the code on how you make this engine run. And unfortunately, there's not the equivalent of the Michael Blanc program to teach you how to convert hotels, right? Like that. I knew that if I was going to succeed in the syndication space, like somehow you've managed to do it, John, all on your own. But I thought, how am I going to go compete with the Johns of the world doing multifamily? I need to have a niche. I need to be doing something different. And so I made the commitment. Maybe it's going to take some more time to do the first deal, but I'm going to become the expert on hotel conversion. I want to build a brand around that. And I'm not going to get tempted looking at self-storage and RV parks and other value-add multifamily. I'm just going to focus on hotel conversion and try to differentiate myself by having a niche within the syndication space.
Okay, great. That's great that you niched and you're different. You're not a value-add C or B multifamily person. You're a little different. You take hotels, distressed hotels, mismanaged hotels, into, what do you say, Class C or B?
We would say C, right? I don't want to compete with you guys in the C and A, or I'm sorry, in the B and the A class space, right? I want to go, there's no competition. I want to supply C class. That's where no one else can build. That's where there's a ton of demand. I want to be the best price property in the market where we compete. I'm kind of like the Walmart of apartments, right? We're the best price. Usually you don't want to compete on price. That's not how you get big profits. Like Starbucks doesn't want to compete on price. They want to have a little bit different drink so they can charge a premium for it. I want to compete on price because I could buy property way cheaper than the apartment guys because I'm paying hotel prices. And hotel cap rates are like mid to upper teens, where a multifamily cap rate might be like a 6 to 8, right? So that's the arbitrage I'm taking advantage of. Buy at the hotel cap rate, drag it down to the multifamily cap rate.
Okay. Okay, great. That's great. I'm glad you found that niche, Alex. I'm very happy for you. When I first met you, you were going through this, looks like a long deal, took a long time. And I was like a little worried about that. I was like, hey, Alex, are you going to pull through that deal? Because it didn't seem like it was going to make it through. So talk about that first deal in Houston that you got under contract, and it took a long time. And I was like, is that still be like close or no? I wasn't sure, you know?
No, we did not close that one. And that's just kind of that's the downside of doing a new niche, right? You're trying to do something, you have to figure out how to do it. And so the first couple hotels that I got under contract, we did not close on, just because like there might have been an insurance issue, an environmental issue, couldn't find the financing for someone that wanted to do the conversion. I didn't have a track record with investors, and so it was hard to raise the money for it. And all of those are issues that you fight through. And on one of those properties, I ended up losing my earnest money, which was a huge punch in the face. But that, and I have a lot of sympathy for people that are in that position. But we just got up and licked our wounds, and kept going, and found another property that did make sense. And the good news is, because I was trying to close different properties, and I had built up a pipeline of investors that were interested in the conversion space. So when I did find the right property at the right price, the right location and everything, then raising the money became easy. And actually, that was probably one of the things that I did not appreciate when I started. And that is, you got to start raising money now for the deal you're going to close in 6, 9, 12 months, right? You've got to start building the relationship and shaking hands and everything right now, just because this is a long sell, and it just takes time to build trust with people, for them to get to know you, and not everybody is ready to invest instantly. And even if you've got a great product with high returns, what every new syndicator should be doing is start talking to their potential investors right now for the deal that they're going to close or partner on in 9 to 12 months.
Right, exactly. That's great advice for prospective investors who will be passive investors. But let me ask you, Alex. So I know you lost a lot of money. Was it hard money day one, or was that just the money?
It wasn't hard money day one. We thought that we had financing and investors lined up, and that deal was right. That was in the beginning of 2022, and interest rates had really started ticking upwards. And one of the people that I was co-GP with, he smartly, correctly, I was a little frustrated at the time, but he correctly said, I don't think we should do this floating rate debt that we had. It was a seller finance deal. The terms were competitive, but it was floating rate. And he said, we might be overpaying for the property a little bit, but I'm nervous about the floating rate debt. I've never seen interest rates go up so fast, and the Fed has really brought rates down a lot in the last year. I think we should be concerned. And he said, I think we should just lose the earnest money and pull out. And so I followed his lead on that, and that ended up being the right decision.
Okay, good. I'm glad you learned from your mistakes, especially your first one. I know that was maybe over a year, or 1 year you had that for? It was a long time, right?
No, I think we more like 6 months we had under contract, and we're trying to close, maybe 6, 7 months that we had under contract, and we're trying to close it.
Okay, yeah, and then that one is just pull out, and it's just because the rates was too high. Let's just decide to pull out. Okay,
that's right.
Then you found a second one, 6 months later, 3 months later? When was the next one?
I actually got another one under contract about less than a month later, and and that's not because, and John, like in total transparency, that is not because I'm just like so mentally tough, but I landed right on my feet and I'm like, let's go. No, that was not at all like that. It was because a broker called me. Hey, I've got another property. Do you want to put it under contract? And I thought, oh my gosh, like I was still so bruised up from the last one, but
I know.
there it was, a great property right in front of me. And so I said, okay, let's go. And
Is that in Houston too, as well? Houston
that was
proper?
it. Yeah, that was in Houston too. Houston was kind of my target market for this model for
Okay.
a number of reasons. I like the demographics in Houston, but I also like the lack of zoning laws in Houston, which just
Okay.
takes a lot of risk out of when you're converting something. I mean, in another city, we would try and, not that we would try, we would get the zoning change before closing, but in Houston, zoning is just not something we have to worry about, right? So Houston became one of my target markets and ultimately ended up closing my first deal in Houston. First
Okay,
hotel
great.
conversion deal.
And how much was that? Was that price for that hotel deal?
$3.4 million.
Okay, how much you had to raise for that one?
We raised 1.8 million.
Okay, that's great. Congratulations. That's a good
Yep.
good size raise, and you and your partners able to raise it. Because
Thank you.
you've
Yeah,
been talking about this.
we could not have, and let me just emphasize to everybody that's out there, we could not have raised that had I not gone through the effort on the first deal, right? Trying to do that raise, learning from that, making contacts with people, and right, that was an absolutely irreplaceable learning experience for making the second raise successful.
Right, right. So you always gotta talk to them and say, hey, here's our deal. We're doing hotel conversion. Are you interested? This is kind of how it looks like. Now, maybe the first deal didn't go well, but we have another deal we can show you. So that's
Right.
kind of, yeah.
That's right.
Great, great. And so looking back, what would you say your biggest, what you learned, the biggest takeaways that you learned from
From
getting
not doing that one deal,
Yes, yes.
I'll say maybe the biggest takeaway is when I did my first syndication, I was the only GP. And
Yeah.
like, I think that's what a lot of people aspire to, right?
Yes.
Like,
Yeah.
I'm gonna get all the GP shares for myself. I'm gonna run the deal. I'm gonna be in charge. I don't have to share with anybody. And as I look back at that, the deal where we pulled out of the floating rate loan, like that's because I got some very good advice from a co-GP. And from that point on, I really prefer working with the co-GP and not having to be the one that's there making all the decisions, being able to share the accountability with other people, and having somebody else to confide in to make different decisions, right? I know this is just kind of a cliche saying that if you want to go further, go together, right? In a team, but it's true. And I should have started the journey with the mindset that I want to be on a team of 2 or 3 GPs instead of envisioning myself as the only GP the whole time. The co-GP model is just superior.
Right. So let me ask you, how did you get comfortable in this process? Because it's kind of a new thing. You need someone to teach you how this works. So how did you get comfortable in doing hotel conversion when it's your first deal, like?
Yeah. Well, that's a great question. That's because now, and let me just say, John, from the time I first heard about hotel conversion and really then started learning it to the time I closed my first deal, that period was like 20 months. Okay. So that's not like it happened quickly. And so that was 20 months of looking at hotels, underwriting deals, figuring out what the sales pitch is to investors, figuring out who the lenders are, who will write insurance. How do you run the hotel while you're doing construction? How do you run a hotel, right? Figuring out all these things, that took a long time to learn. And how do you do it? Well, you read books, you call people, you travel around. I mean, you spend money, and sometimes you try and do a deal that doesn't work out, right? You just you take risks and you talk to people and you reflect on that and you move forward. Is really I wish there was unfortunately there was no course for it. I just had to get out there and look at hotels and figure it out.
Okay. And how do you vet your construction team? Do you do like interviews, referrals? How do you find a good team that can actually do these constructions?
Great question. So the construction part is frankly not that complicated. right? We're adding a kitchenette, and then we're beyond that doing cosmetic changes to the rooms, new flooring, and new, maybe we're refinishing drywall, painting, this, changing toilets and vanities, this kind of cosmetic stuff. So from a construction side, it's just not that complicated. We're usually doing one-to-one conversions. So like one hotel room is becoming one unit. Very rarely will I aspire to combine rooms. There's really only 3 reasons I'd ever combine a room. By the way, if you're combining a room, the construction's more complicated, but here's why I don't aspire to it. Number one, you're almost never doubling the studio rent by taking a studio to a 1-bedroom, right?
Yeah. Mm-hmm.
So the only other so that's why only the 3 reasons why I would ever consider combining rooms is, number one, if there's not enough parking, because hotels aren't designed to run at 100% occupancy like multifamily. So there's not always as much parking. So if there's not enough parking and there's not land you can buy in the adjacent area, then we would have to combine rooms. That's number one. Number two, I'd combine rooms if the rooms were extremely small, like under 250 square feet. That would be small. And then number three, I would combine rooms if I had too big of a hotel, and so big that I was worried about absorption. In other words, I was worried about how quickly we could lease up that many studios. Maybe I wanted to have a little bit of a different unit mix. But typically we're trying not to combine rooms. So that makes the construction pretty straightforward. So how do we find the construction? Well, we get on the ground and start interviewing different GC firms. The good thing is hotels are doing construction pretty frequently. Like hotels have to go through what they call a PIP, property improvement plan, every 5-7 years. And that's like, you stay in a Marriott Courtyard every 5-7 years, Marriott will tell you as the hotel owner, you got to have this kind of carpet, this kind of bathroom, this kind of bedding, right? This kind of hallway, this kind of amenities in the lobby. So there's lots of groups out there that are used to doing these remodels on hotels that the brands come in and demand. So we interview those groups, put it out for competitive bid, and look at who's got the track record in that market, who's available, what the timeline is, and go ahead and pick one. So really not that different from construction on a value add multifamily deal.
Okay, great. That's great to know. It's great to know. And what is the normal occupancy in a hotel? Is not 100% or 90% versus multifamily?
I would say most hotels are underwritten to something like 60 to 70%. And that's a pretty healthy occupancy for a hotel. A lot of hotels run at 40-50% occupancy.
Really?
And so you'll see a lot of hotels that have a 1-to-1 parking ratio, where at multifamily might be more like a 1 to 1.3 or 1.5. Some hotels, it's not uncommon to see a hotel with fewer parking spaces than rooms. And so when I'm actually making an offer on a hotel right now, it's got fewer parking spaces than rooms. So that's a problem. And so what we have to do there is make sure that there's some adjacent land to the property that we could purchase to expand the parking lot.
Okay, that's very interesting, Alex. I didn't know that hotel was that low or occupancy, 40-50% on average. That's low. That's very low.
I mean, you wouldn't want your hotel to run that way, but hotels are high fixed cost, low marginal cost business. Doesn't cost the hotel a lot of money to occupy one more room per night, right? Like, what do they have to do? Clean one more room, wash one more set of sheets. They've got pretty high fixed costs. So the way the hotel makes a lot of money is to have high occupancy, of course, because it doesn't change the mortgage or the staff, the payroll payments or anything to have high occupancy. But what that means is that banks underwrite the hotel to survive at lower occupancy.
Right.
So yeah, you pretty regularly, you'll see a market average for hospitality with like a 40 or not 40 is kind of low, but 50-60% occupancy is a market average. Totally possible, totally normal.
Okay. And then is this a agency loan you're getting, or just a hotel bank loan, or what kind of loans you offer this?
So that's a great question. And this was one of the challenges when I first started. It's like, you can't get a hotel loan if you're going to take the hotel and turn it into an apartment. You can't get an apartment loan to buy a hotel. So what do? You got like 3 options. One, seller finance. And
Okay.
by the way, owners of older distressed hotels understand that banks are not very willing or excited to lend on their old hotels. So they're open to seller finance. Option 2 is to go with bridge debt. And option 3 is to find a local bank that understands the vision and the potential of the business plan.
Okay. Okay. So the local bank, you to put your vision in your deck and try to convince the local banker that, listen, we can do this. We can, even though you know track record, it's hard in the beginning, you have no track record. And then
It's so hard when you have no track record, right? And so what do you do when you have no track record? You've got to have co-GPs that have track record, not just in hotel conversion, right? But you've got to say, look, we've got a track record in multifamily. We have a track record in construction. We have a track record in property management. We have a track record handling other distressed assets. And then you got to make sure that you're buying at a deal and that you've got debt that's a deal. So the first deal that I did, when I bought that hotel for $3.4 million, we have an appraisal that said the as-is value of the property is $4.55 million. So we're able to show that to the investors and say, look, we're getting this at a great deal. We also got 3-year seller financing, interest only, right? So we were able to show, hey, look, we've got really good seller financing. We're also able to show, hey, we're running at 50 to 60% occupancy before closing. So like the day we close, we'll be cash flow positive. And they were like, okay, we like that. And they said, well, we're also going to prepay this mortgage for a year. We said, also, we're operating in a town with no zoning, right? Also, here's who the property management's going to be. Here's who the construction's going to be, right? We had all this laid up so that even though we had not done that kind of specific deal before, we built trust with the investors based on our other track record. And then we, at the end of the day, we just had to share more with the investors. And so on that first deal, we did not do a waterfall, right? We did a straight split with the investors. So they're going to participate in all the upside. And I put significant money in as an LP. And all of my GPs, I think in our first deal, the GPs put in almost 40% of the money needed to close the deal. So that was a very strong signal to investors. And that's something that people should just be prepared to do on their first deal. Maybe not 40%, but they should be prepared to put major skin in the game.
Right, right. So putting your skin in your game and showing the investors that, listen, I believe in a deal. I'm putting money in my deal. And here's the reasons why we like this deal. And you can always show them the sensitivity now. Say, hey, we're at 6% occupancy. We're still making money. You show them that, and then they're happy about that. And then they'll believe in your vision, and they'll put money in your deal. So,
that's right. That's right.
Good, good. So now you've done your first deal. What stage is it now in your first deal?
Great question. So right now we're in the middle of construction on that deal. We've been doing a lot of common area cleaning and improving operations, and we had to reorganize the staff and the schedule, because what we're doing is we're continuing to run as an extended stay hotel, targeting weekly and monthly stays as we are doing the construction to remodel some of the rooms to multifamily. So we've got a construction plan that's a 120 unit hotel, and we've got a construction plan so that we can keep 60 units occupied at all times. So we got our hands around the 60 unit hotel operations and streamlined that. We went totally cashless. We had to implement property management software that works with hotel guests. We had to set up and get hotel licenses, pay hotel taxes. We made sure to get new laundry in the hotel for guests, vending machines, ATM machines, cleaning the parking lot, landscaping, all this kind of emergency deferred maintenance. We had to keep our 60 people happy. Then we start construction on the other 60 units, and we're doing 1 floor a month in the hotel. There's about 10 rooms per floor, 10 to 12 rooms per floor. And in 2 weeks, we'll have the very first floor finished for new residents to move in. And then every subsequent 2 to 3 weeks, we'll be finishing another floor until we go through the whole building.
And how do you feel about tenants who lives there, let's say 1 year lease versus a short-term lease, long-term versus short-term? Because do you feel that they don't like that, or how do you feel about that situation?
So we'll when we are leasing, we'll go for just a standard 1 year lease, but we'll charge a premium for the 6 month or the month to month. And I don't expect tenants to have a problem with it, because we're trying to be, and we will be, the best priced unit in that market, right? Like we'll be a solid 20% cheaper than the lowest price C-class unit in that market. And we will have electric, water, cable, and internet all included in our rent price. So people in the limited income will love that we've got everything inclusive. They pay one price every month. The electric bill doesn't fluctuate with weather. If their hours are a little bit light at work, they don't have to worry about getting squeezed financially. They pay the one price. So I think that there's going to be strong demand for leasing. Now, the people that are there now, they're on month to month because it's a hotel, right? We can't sign 12-month leases until we finish the construction, finish the legal conversion to multifamily. Those people will be given the opportunity to stay if they have a good payment history with us.
Okay.
And those people are not going to have any problem going, I don't think, going on a multi-month lease. Will still allow them to pay weekly if that's what they need for their budget. But here's why I think those people are going to be very excited to stay. Right now, we charge around $300 a week, like $250, $300 a week, okay? So it's somewhere between $1,100 to $1,200 a month to live in the hotel. We're going to rent out the fully remodeled units. And in this hotel, they happen to be 2 rooms pushed together. And so I said we don't often combine rooms. These rooms are already combined when we bought the building. So this building was built as a 250 unit Holiday Inn. We bought it as a 120 unit independent stay property. So each unit is 2 hotel rooms. One is a living room, one's a bedroom. To combine, they're just a hair under 600 square feet. We will be able to take people that are currently paying $1,100 and $1,200 a month, move them into a newly remodeled unit and charge them $925 a month. We'll be able to cut their rent by 1/3. Think about that. No government money, no subsidy, no handout. And in this economy, we are all going to make more money and we are going to cut those folks' rent.
Wow, that's interesting how you're going to reduce it, because from a short term to a long term, which makes sense.
That's right.
And remodel too. That's nice.
Right. Now, a lot of people listening, they probably wonder, why don't you just want to keep them all short term if that is more profitable, if it's more cash flow? Like, well, 2 reasons. One, I'm not in the hotel business. I don't want to be in the hotel business. The real reason that this is so profitable is because we're buying at the hospitality cap rate and we're moving it to the multifamily cap rate. So it's really a financial conversion more so than it's a physical conversion of the property. Well, in order to get to that multifamily cap rate, I need to be 90% occupied for 90 days with people on long-term lease, right? Fannie and Freddie are not going to like it if I've got 60 units going on Airbnb or short-term, right? Just like they wouldn't like it if you had all that going in an apartment complex, right? They would want to underwrite it differently. And so I don't need to mess around with a little bit higher cash flow from some units just to rent them out short-term. No, what I need to do is get to 90% for 90 days, because then we will have nearly tripled the value of the building and we're going to be able to do a huge cash out refi.
That's great. That's great. That's great, Alex. I'm glad that you got a good discount on hotel at a low basis, make it back to a true traditional multifamily Class C, and get the higher value through the NOI valuation, value creation. That's great. I'm very glad you got that. And you're offering, I guess, a benefit to your tenants who get paid lower rent. They'll probably will stay if they hear that.
Yeah.
Most likely.
Yeah.
That's interesting. Well, I'm very glad. Hopefully in 1 year we'll touch base again. We'll see you, and then I want to see what's going on with that one. So, and then you have another one under contract, you said?
We do. One under contract. Actually, I've got 2 accepted LOIs right now, so about to go under contract on some others. So haven't made those public yet, just because we want to finish doing the due diligence. But
yes.
if folks want to go to my website, Hotel Shift, that's SHIFT, hotelshift.capital, and sign up, then we can share the details of those deals when they become live.
Right. So yeah, good luck with those deals. And I hope we should do very well, Alex. Awesome.
Thank you, John. I appreciate it.
Okay. Well, wonderful. People reach out to you. Go to his website, hotelshift.com, right?
.capital.
Dot
Yeah.
capital, yeah.
And I
capital.
try and write about, I'm trying to write almost every day. I'm almost there. I aspire to write every day something about economics, affordable housing, hotel conversion on LinkedIn. And so if this is a topic you're interested in, connect with me on LinkedIn, Alex Cartwright.
Okay, great. Well, thank you, Alex, and have a great day.